Hello, testing, testing. Let's see if I'm live or not this time. Hello? I guess I'm live. Let me see. Last time I don't know if I was live or not. Okay, let's chat in with everyone. Hello, hello. Hi. Let's see. Guess there is a delay. Okay. So is no one here? Am I no live? I'm confused now. Okay, right. So, all right. So that's it. This is start the webinar number 2. Okay, guys. So last week we just talking briefly about what a good important points that people that don't realize what is actually a investor trading and what's the difference between that and how you can actually work out some myths that you can be a full time making a lot of money very quickly and so on. Yeah. So if you have any questions at this point, let me know or ask in the chat and I can reply to you back from that webinar. Yeah, you got the recording there to actually to see the rest of the details and so on. Now, what we're going to do now is to talk a bit more about, remember all of you, this is absolute beginners, but many of you maybe don't know even that, even if you're thinking you are absolute beginner or beginner, you will surprise what can you learn from these webinars. Yeah, it's good to refresh as well, even if you are a trader. Even myself, 25 years trading, it's good to remind myself what is everything, how everything works, the foundations of everything. Yeah, so with that clarity, then you understand what to do next. So I'm gonna mention briefly what are the main instruments the majority of traders actually trade. Yeah, there is some exceptions in here and then, but the majority of traders, they actually focus into 4 groups. Yeah, and the last group, many of you know now, is a new group. It's called cryptocurrency. Yes. And we have, well, let's start from the most popular one, which is actually Forex. Why is the most popular? We're gonna go into details later, but to understand simple what is Forex is that is two currencies with each other like a balance. So remember about we said last week about somebody need to buy, somebody need to sell, and then there is a transaction between that, there is a movement. So we're looking for that. We're looking for what have more strength and weakness, and then you're moving from one way or another. It's like a balance. Yeah. And that's between pounds and euros, pounds, dollars, GBY. So it's many currencies, the main ones that are there. And then you go the exotics, and there is always the exotics. Forex is a bit more volatility. We can go, there is a main ones, I would say it's 28 pairs with crosses. And I will go into details into Forex later. But so to give you an idea, it's just pounds against euros, euros against pounds. If you're going to for holiday, you go into Spain and you want to buy something, you need to change your pounds for euros. So, and then they give you euros, but normally they give you there is some commissions in there. Somebody takes some money in between, but you get pound from euros, euros for pound. If you go back to London or to UK, or you go back to US after being in Spain, you actually take your money and you change again from dollars, or and this will make it, or pounds, will change it back again to euros, or euro vice versa. So what happens is that you're moving the balance of how much money you have on one side to another. So more euros, more pounds, more strength one way or another. Yeah, it's not exactly that, but this is to give you an idea. It just is buy and sell. Remember, we discussed this before. Now, the next group is for me is the most important one, because this is the foundation of everything, and this is stocks. Well, you got something even older with these commodities, but we're talking about first stocks is the foundation of what is called trading itself. Is like what may really make it the market. That's where you go Warren Buffett, you go many very professional traders making very good living from that, and they become very successful in the long run. And this is stocks, yeah, and explain to you as well why. We can go in details if you want to, but we'll see about that, see if you have the time. Now, commodities is actually what I call the real foundation. Yeah, what this means is physical things. It's like you got real gold, you can have wheat, you can have oil, you can have, it's actually real stuff, real items. Silver, platinum is materials that you can actually real quantify by numbers. Yeah, so you can actually have this. And I would say for me very quick, the main difference between stocks and commodities is that commodities doesn't give you dividends. Yeah, which is another thing we can talk about. We don't get too confused. Dividends we talk about later. Yeah. Now, cryptocurrency is a digital market. Yeah. And what is for me to understand what is actually cryptocurrency is like, if you remember when you just went to make it simple, it's like, for me it's like a token. Yeah, when you went to, I don't know, to play some games onto those machines, or you play a raffle and you just get a ticket. Yeah, if you play this game, you will get 2 tickets. If you play that game, you go 4 tickets. And this is kind of the foundation of the cryptocurrency. I'll explain to you why, in the digital world. So if you move in some money from that money, you will create cryptocurrency movements. So I don't want to get too complicated neither, but it's actually digital money, people say. But it's as Forex is not digital too. Stocks is digital. So it's a bit, don't get confused, yeah? But cryptocurrency is pretty much one element moving in one direction, and it's fully digital, yeah? So let's summarize this, because I get too much I can get lost. For me, it's difficult to go so basics, because it can go very deep in detail. So let's make it simple. Cryptocurrency Forex is actually the balance between 2 elements, so it means, or 2 components: euro dollar, pound dollar, and so on. Stocks is actually you own shares of a company, so you really own parts of a company. Commodities is a physical items. It's like gold is a real things that you can quantify, yeah, or silver or platinum or oil and so on, yeah. And then cryptocurrency is more like we call it digital assets, yeah. Okay, so and normally the main ones, they are Bitcoin and Ethereum, and there is many more if you probably heard about that too, but mainly the main one is the foundation is Bitcoin, yeah, and then there came others after. All right. So this is the first part. So let me go, let's see if you got any questions now. Let me see. Okay. So any questions, guys, at this point, please? Yes, no? No? Okay. Okay, so let's move into the next part of this today webinar number 2. So now we're going to be focused into Forex, what really Forex is, yeah? Why so people that are so interested in Forex? It's one of the ones that move the most. So why Forex is so popular? Well, it's a very simple question you need to ask yourself, is that How people buy and sell stuff. Now we go crypto. Well, because it's not, that's another question. Crypto is there and you can buy and sell stuff, but the main one, still the main one, is still, even if the cryptos take it quite a lot of the market, Forex is actually control the global market transactions. So it means you buy and sell in one currency, one other. Now some people say 7 days a week, 24 hours. No, it can be moved 7 days a week, but for you and me, we can actually trade in 5.5 days. If you go lucky, if you can trade on Sundays, some 2 hours there or something like that. The rest of the time is for a close traders. So it means banks, hedge funds is the one that go access, mainly banks, some massive hedge funds as well, but mainly banks have access on Saturday to be trade. The rest of the humans, normal humans, we do not have access to that. Yeah. So then why this is important to be aware of that, who actually trade on Saturday? The big ones. Remember we discussed before in the previous video, that's why it's important to understand this, is that if the biggest ones place their bet on Saturday, or they have the chance to play the bet on Saturday, is because they're thinking something may happen. So for example, if they've been analyzed, they've been going through the week and something went wrong or they didn't like it, so, or they want to bet something against the market or in favor of the market, you will see gaps on Forex. Gaps in one direction, one other. And why this is happening? Because the big players, they take direction of the market. Doesn't mean if you go a see gap alone, all the other big players will follow along. Potentially somebody's get out of the market and produce this gap long or this gap short. Yeah, it's not guaranteed, but it's quite important that if a gap happen, it's because the big players have taken action. Now, doesn't mean you need to understand that it's going long or short. You need to understand that if there is a gap, something big is going to happen, or it's been building up for a long time ago, because maybe we have gap lower or even higher. So you need to understand that something big is going on by the bigger players. So what is the meaning of that? When the market take direction after that gap, is where the market have to take direction. Simple. When I've been working in banks for a long time, is one of the things I learned there is that taking always say, we investing in stocks of Forex and we take at least 3 years in them. So they got this kind of mind of when I'm working for Credit Suisse or Barclays and all these banks, they always go in their heads that minimum to invest in for 3 years. So if there is a movement of the market in one direction, one other, euro is pushing long or pushing down. So whatever direction is taken, you need to thinking about that. Okay, the bigger players is play, and potentially can be this movement for 3 years. Yeah, this is when you need to think in numbers. Yeah, why they're moving? You can actually find out later, or maybe it's too late when you already see the movement. Yeah, so be aware of that Forex is there, but for us normal humans, 24 hours, 5 days a daily, and even if you can trade at night, that is a dangerous site to trade with. Yeah, so, and I will explain to you where is the best place to trade as well, but let's actually we can work into detail now. Even if the cryptos take a bit of the market, we can work out more details, but let's go into all of them now, and I will explain how they interconnected to each other in one moment. First, I'm gonna see if you guys got more questions. Okay, small, and I can tune up. Okay, let me see. All right, let's put my microphone closer to my face. Let me see. All right. Let me see. There is any questions, guys? You want me to ask? If there is any giving away account? No, not today. But it will be accounts for free. Yes. So I'm looking for, if I can see, guys, that you take this seriously, that you got your consistency, that you're actually working hard to be moving forward as a trader, and I see you with me. Yes, why not? I can give you free funding accounts. That's no problem for me. So Okay, so I hope my mic is better now. Can you please let me know? And if you have any questions. Okay, so let's work out the next part, which is this case. If there is no question, let's work into the next part. Now, let me give you a story that will help you to remember, or try to make a story to remember how everything works. Yeah. So let's try to make something up. Just make this up now. So let's see. Okay. So first you need to understand what is each part of the components of the market, how it works, and so on. So we got the stocks. We know it's part of a company. Yeah. But the companies, the stocks, that be made of what? They'll be made of things, or either you buy and sell stuff, or you buy and sell services. So it's like an item or a service, yeah, in general. There is other exceptions as well, but that can be the case, yeah. Now, commodities, we got real items that obviously you can have commodities as a in charts display trading, but not real physical stuff. So it's different. You can actually move what we say, markets can move up and down. Nothing need to do with the market volatility and so on. There's nothing to do with the charts that you see normally in some places with the amount of real gold you have, yeah, in your hands. So they can go more and less. So it's like it's like stocks. Stocks, the price of the real stock maybe is $100, but people believe that it costs more. So then instead of being $100, can be actually $200, $300. The same thing happened with the commodities. Maybe there is only 1,000 pieces of gold, but they believe that that piece of gold is cost more than 1,000. So they're going up more, and it costs maybe 2,000. That's just the case happen now in the current situation we go with gold, yeah. And then you have cryptocurrencies, which is actually totally separate from the rest, which is actually, well, separate. People can buy now stocks, can buy it's actually decentralized. It's like it's not that, they don't have that control from the government, and what is called decentralized because there is not that many tax involved and so on. Things have changed now, yeah. So now let's make this up clear. So if you buy something and you sell something, let's say I buy a gold, yeah, with real money, with Forex, with, let's say, with pounds. I buy 1,000 pounds of gold. What will happen with the market? So let's say I move the market, yeah. So what will happen? The pound is actually will be affected because I spend more, but now somebody else come in and they buy euros, the same gold that I have myself, they buy from me, and they speculated that the price is even more. So then we go to competition between pound and euros play with each other. But the commodity is moving too, because somebody's buy, somebody sells. So the gold is moving up and down. So we go Forex and commodities, yeah? So, and that Forex and commodities is that the gold, imagine that gold is needed for making cars. Well, that's not the case, but let's say that they need it for make cars. So that company that they have stocks, they say, oh, my price is going up. Of my stocks, I believe that if the gold is going up, the price of my possible cars would cost more, and so or would cost less, depends if it's to supply and demand. So you see that everything is interconnected to each other. But now somebody else come in and they start to buy with crypto, and they buy some gold with crypto. So what will happen? Crypto will go up and down, depends how much money they buy. So gold will continue up, and we focus in gold. So everyone is focused buy and sell gold. Gold is go up, 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 up. Other stocks, commodities will go down or up, depends of the supply and the demand. I don't know if this is clear now. I know it's not, but what I try to explain to you guys that everything is interconnected with each other, and whatever you do will move the market. It's like for you, even if you stay at home doing nothing, you move the market because you pay bills, you spend money into the property to live, to renting. You buy a food to eat, all that is moving the market, yeah. It's obviously very tiny, but it's affecting the real market movements on the end of the day, because you buy a Coca-Cola, and the Coca-Cola, you buy a lot of Coca-Colas, the Coca-Cola is going up and up and up. or not, or it's going down because now we got Pepsi competing with Coca-Cola, and then we got prices that fluctuated because two products the same thing at the same time. Okay, so be aware of that. This is important, that everything is interconnected with each other. Yeah, so remember now, because it can be very complicated, and we can go into a lot of examples of how everything works, like for example commodity coffee, or we can talking about more about a specific crypto, Ethereum, Cardano. We can talk about details about stocks, Tesla, and all this stuff like that in details. Yeah, now for you that are a new trader, where is the best place to trade? Yeah, because you are here to make money, and everyone will say to me, gold, Danny, gold, that is the best one. I can make a lot of money there. It's always going long. Oh no, crypto is much better because make a lot of money very, very, very fast. So wrong. If you can make very, very, very fast money, you can lose very, 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 very bad money quickly, very fast, and bad situations will be affecting you more. Yeah, so I have seen this many times. People get excited because crypto is going long, because gold is going long, and people they see quickly making money because it's just making money is easier. Yeah, fantastic. If it was like that, I would not spend hundreds of hours doing psychology on myself. Yeah. Anyway, so it's not easy. Now, where is the best place to start with? This is the key for all of you. But before that, let's see if you got any questions so far. Let me see. Any questions, guys? So, okay, let me see. Pride asked me, okay, let's see question 1. If one day cryptocurrencies replace traditional currency, will it change the entire global forex system? Let me explain to you about this one, and I make you to think about it. Yes, the answer will be yes. It will be changed. But do you think the big players will allow this happen before they actually control it? Because what is actually crypto? Crypto is a currency that they are not control of. Let me talk about something more interesting. Yeah, marijuana. Okay. What does the marijuana means? Is that actually it's an illegal thing to happen that you can smoke in UK. Yeah, but if you go to Holland, you can smoke marijuana. Yeah, in specific places, and it's legally totally now. I think in New York as well and other locations. Yeah, so before it was bad, very bad. Oh man, we cannot smoke marijuana. Now you can. Why? What is the difference? The government control it. Before marijuana, it was alcohol. Alcohol was illegal, and everyone was in trouble. And until the government controlled it. What is the meaning of controlling? Taxes. Tax. If you say they're doing for actually to take care about everyone and all that. Yes, it's true as well. Yes, but the main reason they're doing it is because they can't charge in taxes. Yes, so this is the key. If you get taxes in control, you're gonna be okay. You're moving forward, okay? So then it's fine. We can make it legal. That's just not in control in Holland. You can actually move it. So think about crypto is the same thing. Yeah, crypto is that now is something in principle was even illegal to be trading with and out of control, decentralized. Yeah, but now it's more and more in control by banks, and they create their own. They start to create their own currencies, their own names, different names. So at one point, yeah, it will be replaced, but you will not even notice because you already have real. Do you have real money in your bank, or you have only digits? Let's say I got $10,000, go $20,000, I go 5,000, I go 500, whatever you have. The reality, you have only digits. The real money, banks use it to invest it in other assets. Yeah, this is the reality. You don't have real money. If everyone, all of us in UK or in USA, they will go to the bank to take the money from the banks. You cannot take all the money from the banks because banks doesn't have all the money. This is historical, happen all the time, country by country, because they use the money to invest in assets, which is real things, houses, gold, silver, whatever, real things that they can actually produce a percentage better than keep the money in the bank doing nothing. Yeah, so this is how they work for them. Yeah, Now, so it will be change the global forex system. In my opinion, we're not gonna notice. It's going to be easily transition. Nobody's gonna allow them to change drastically. It's like I happen thinking about that from when the alcohol was illegal and then became legal. So go for history, understand the actual transition. Yeah. Okay, now let's go for next question. Does some trading principles apply to all different instruments? Trading principles. Trading principles. Well, everything is interconnected with each other. I don't know if you mean principles, what do you mean exactly? But what I see that everything is the same is that everything is reflected in a chart. So psychologically, there is always somebody behind. Doesn't matter if it's robots, AIs, whatever you want, is always a global, psychologically, movements that make the market move. Doesn't matter which market is, and depends if the market move more here or more there. More people will be active on it, more fears, panic, overconfident. All this will move the market. So if you want to call it a more than principle, I will call it a pattern with across all the instruments and psychology. Yeah, macro psychology. Don't know if I have actually answer your question correctly. That means if you don't mean that, how is trading for big banks different from real trading? Well, big banks got the same problem that we have, but because they competed with each other. So the big difference was not different. They actually, the only thing that's different, they got access on Saturday, but they competed with each other, so they got the same problem. They need to make money. End of the day, they got a massive number of a force to working with each other. They're looking for less percentage. They know more about the reality of the market in the long run. So they are disciplined more than us. Well, they go everything almost automatically. Even except maybe it's like I give you an example. Yeah. The trading floor in Barclays, yeah, there is what is called compliance. Compliance is actually people working for the bank, helping the traders. So there is about 20,000 people, yeah, I call them assistants, that helping for the traders not to break the rules. But who? Which traders? We call them the automatic traders. So automatic traders is traders that they got not many flexibility. I would say 10% of their all daily routines, they got possible to do something with their daily activities. 90% of them is restricted by the 20,000 compliance traders or compliance employees that are helping them to trade. Yeah. So they collecting the data, they tell them what to trade, they tell them what cannot do, and so on, the risk they can take, everything. You just been there to actually follow some instructions. Yeah. So those 100 traders. Now there is a special group which is only between 8 to 10 traders. Listen to me carefully. 8 to 10 traders, what we call in the top traders. And those ones, they are in a special room, separate from the rest, are the ones that move the most money, but the whole compliance, they are aware of what they're doing all the time. Yeah, that is what we call in the real traders. The rest, there is nothing. Just everything automatically. Even I would say that if it's not less than X amount of millions, you can even trade. If it's not automatically, it's more, it's bigger. Even we talk about the 100 traders first. So what I try to explain that there is so much control, so much rules, and they're aware of that making 10% a year is a good money. And for you traders, they're looking for 10%. You're looking for 100, 200, whatever, yeah, percentage. Until you learn that we're looking for 20, 15, 20% is a good percentage. And big banks, more money they have, they're looking for less and less percentage, yeah? So be aware of that. So this is important. So I think they go more control than us. That's the main problem. My main difference between them and us is that they're working together. We are not working together. We are isolated, yeah, in general, or when we create groups like that. Now let's see more questions. Okay, so any more questions, guys, before I move to the last part? That even I forgot what it was about. Ah, yes. Okay, remember now. Okay, now let's talking about the next part, which is really, really important. What am I going to trade first? I'm a beginner. I want to learn to trade, and I want to do trading crypto, make money, gold, make money. Yes, all the stuff like that. I want to make money quickly, as fast as possible. And the answer is yes, traders, like professional traders, we're looking for volatility, yes. But you need to looking for stability too. So, and I can explain to you as well how I trade myself, yeah. So let's simplify what you need to be trade yourself if you are a new trader. And my simple advice to you is to go to Forex. You say, what? 1 second, Danny. You said Forex is one of the ones that move the most. So if we keep it in order, the more dangerous ones we'll say is crypto, commodities, depends of the year. Yeah, then we go Forex. I would say Forex and crypto is similar level. It's difficult, depends of the year as well. And then we have a stocks. Yeah. Now, why that order? It doesn't mean you will not lose money on stocks. It doesn't mean you make a lot of money in crypto. Is that the best, more volatility, more difficult to actually. The most important things that you're looking for is to have clarity how to maneuver. Yeah. So to start to create your own system, to start to learning, to start to create a simple way of working, the best instrument is to go to Forex. But which one? In my opinion, based on my experience and many years of trading, start with the euro dollar. Yeah. Don't need to be trade, guys. You are not. You don't have what to do now. But start with the demo, back testing, euro dollar. Why euro dollar? It's not because it's the first spread commission cost is actually very low. Yeah, it's the best one for that. But it's actually the best one that it got kind of organized patterns. London open, then 3-4 hours later, New York opened, closed. They got kind of a rhythm of movements, yeah, and that rhythm make it easier to control it. This is euro against the, dollar against the euro. So it's actually the movement. They are clean. There is a lot of volatility there. There is a lot of movement, but there is not the surprise of having a spread at night that kill your trades. Yeah, you go much less. You go more control on it. Yeah, so start from that one. It's the best one for me, but demo. You know how to trade? Start demo. Observation is the key. Yeah, very important to observe the trades. Yeah, so this is the best one to working on. Now the rest is later. For example, now how am I start trading myself? I start trading first to, and a bit heavy mind as well. I'm thinking if I trade the most difficult, I want to be the most profitable trader. So that's what always went for the most difficult. When it was no crypto, but if it was crypto, probably we went to crypto too. Yeah. So if you start doing this trading, let's start to building up your knowledge as a trader. Where it will be the best place to start with? We say already euro dollar, yeah? But why? Because first you need to understand, I'm going to ask you to look in the charts and do in and out. You must the best way to do it is actually on this sequence. First do a swing trading, then do day trading, and then do a position trading in this order. And I explained to you, psychologically, I have looking at all the possibilities, and this is the best combination possible. Okay, so first swing trading. Why swing trading? Means it's holding for 3, 4, 1 week. Yeah, try to just go to trading view, do a demo account, and try to pretend that you're going to take this trade. Remember, it's back testing and demo, and go for that and say, I will take this trade and I will hold it until this moment. 3 days later. First, we learn to get patient. Then you learn how to actually to hold positions at night and how to actually maneuver. I don't want you to do day trading yet. Okay, you will not. If you do this first, you got 99.99% of probability to lose. First, you need to understand how swing trading works. Then, after a month or 2 weeks or whatever number of months of, I would say a couple of months or a couple of weeks, depending how busy you are working on it, how many instruments, first euro dollar, maybe pound dollar, maybe you go 2 of this. Don't go beyond that. Yeah, that's it. 2 pairs is enough. Now, start trading every day. So let's say that you have always at the same time and always at the same time frame. So let's say that you want to trade every day a euro dollar, always at the same time, 9 a.m., 5 p.m., always at the same time, the same day, same time, Monday to Friday. And you're going to take maybe trades in 1 minute, and you take 1, 2 trades, 3 trades, 10 trades. Remember, it's demo, back testing, don't do real, okay? Why we need to do this for? To get used to the speed. 1 minute is not the same to 1 month, yeah? Waiting. So 1 minute is quick, even seconds if you want to. This is a scalping. Go for a scalping. Dude, just play your brain to working into the speed. Okay? Now, the next step, when you just been saturated of do this day trading in and out, remember, even if you make money from swing trading or day trading back testing, do not trade real yet. Okay? Just wait. You need to wait. You need to be patient, and that's the key. You need to learn patience. Now, when you feel that stress of day trading in and out, losing, making, then you're going to do one more thing: is to hold buy positions, and now you're going to move to weekly and monthly. And you say, "What are you talking about, Danny?" Yes. Now what you're going to do is called position trading. So you're going to buy, you can do euro dollar as well, buy it on Monday and try to sell in 2 weeks time on Monday. Yeah. Will you hold it? Will you not? What will be the cost to hold it for so long? And so on. 1 month later, go to the back testing. You can back testing. If I did buy here and I close there, how long? But you must to be able to go through the process of waiting. It's not that I'm back testing and I simulated what I've been testing 3 years, 10 years of back. No, you need to do real back testing in front of the screen and wait for 2 months. I say, what are you talking? That's too long. I want to trade now. I want to make money now. So if you do that, you will not make money. Okay? So I just give you the best option possible for you to have the mind of a trader, to thinking as a trader in the right way, in those 3 psychological processes. So first, swing trading, day trading, and position trading. Okay, that will give you the perfect mindset to make you profitable on the long run and have the right mentality to get ready. Yeah, to be able to start to trading a small account, but start trading slow. Yeah, and that will become much later when you have all that in your brain ready. Okay, now let's go, guys, to the questions. Let's see what we have now. So I think patterns are all the same and apply to every chart. Yes, but which patterns? You need to think about psychologically patterns or volumes patterns. Okay, when you see a chart, first, obviously, well, I didn't mention about this because it's not the point now. A chart must be naked. What is the meaning of that? It's like only, I start with candles only. Yeah, forget about the rest. Nothing else need to be there. Simplify, because if you don't know what is the meaning of all the other instruments or indicators, don't use them. Say, no, I know everything. No, even if you do know, eliminate them. Yeah, keep it simple to start with. Yeah. So, do professional traders have lower drop down than us? Well, normally professional, we don't blow up our accounts, so I guess yes. So yeah, we control the risk, which is quite important, because we're not looking to make money. We're just looking to follow the process, and that's the difference between us and professionals and normal traders. Traders, they don't follow processes; they follow their feelings, their emotions, and the trigger whatever they want. It's not a plan that going to do 1% to trade blah blah blah, and then they lost 3 times consecutive. I want to recover, and then I'm risking 6%. Yeah, so we don't do that. So if I do risking 6% later, it's because I have planned it. So yeah, I can be wrong. Doesn't mean I cannot be wrong either. But if I trade 6%, it's because I have planned that before. No, I'm not planning during the trade. Doesn't make sense. Okay. Let me see. Off-topic question: which currency pair is the most trader in the Forex market and why. What is actually, as mentioned earlier, euro dollar is one of the main ones for trading. It's the best one for trading right now. Let me see. Hi, what you describe swing trading, deposit trades only for Forex? Testing, please. Can you please describe? Okay. So when I mention about a swing trading, day trading, and position trading is for everything. I guess one of you guys looking for jumping into crypto. Can you do that into crypto? Yes, you can. Can you do that in the stocks? Yes, you can. But that's a different learning process. Okay, if you actually start to do a day trading in stocks, is completely different. You got gaps, jumping is much more complicated than the day. On day trading, the most difficult one for me, after many years of trading, is actually stocks. Yeah, because it's not done. It's not been building up for day trading. It's been building up for position trading. Okay. Anyway, so testing and all of them at the same time. You can switch between that, but it's like as I say, when I was thinking about this exercise, I was thinking about euro dollar with this Forex. If you go into stocks and commodities, well, okay, let's make it clear now. What you can do to make it even better is to, if you can actually access demo accounts, don't do real, is to do swing trading on euro dollar, day trading in euro dollar, and position trading on stocks. Yeah. Or we can do another combination, could be a swing trading on crypto, day trading in crypto. I will use only Bitcoin, for example, if you want to go for that direction with high volatility. But it means day trading means go down, small time frames, yeah, because you want to see the SP, yeah. And then position trading, go to stocks. Always position trading to stocks, yeah. That will be the best option, I would say, yeah, if you want to combine all of the options. So can you tell what is the real use of backtesting in the logistics? The backtesting is a long topic to talk about it, but okay, so this is true, yeah. Backtesting works or it doesn't work. Okay. The first question you need to ask yourself: do you do backtesting correctly? And what does backtesting correctly means? So when you do backtesting, you just got no real money. There is no feelings. Yeah, I'm going to trade. Yeah, I'm gonna take money. I'm gonna risk it more. I'm gonna risk it less. There is no emotions involved. So this is the problem. When you do, there is no emotions involved. Is the real trading that we don't feel anything. That would be amazing. I don't feel anything? Yes, I do feel something when I'm trading. Yeah. So when I do trading demo, even pro, what is that? Pro friends accounts. Do I feel anything? No, because for me, just it's a small accounts. I don't mind. I test it. It's a testing accounts for me. Don't feel anything. I go for them. Yeah. I know that your pro friends now become very popular and very good things to use for trading. But for me, still, I prefer my own money. Yes, I've been trading pro firms. Yes, I do as well. I have accounts from pro firms, but I trade in different. Yeah. So this is the reason behind is that back testing, there is no emotions involved. And that's the mistake people make. My trading strategy works because I have back testing and I make money. Wrong. Okay? You haven't back testing yet. So what is the real step to actually to working out? Okay, I didn't want to go to this yet, but after doing your trading, let's say swing trading, day trading, and position trading, and you do your back testing with no emotions, yeah, and you got something clear. My strategy works now. The next step is to trade in 0.01. Nothing. 0.01, with this actually very little amount of emotions, almost nothing, yeah, which is a problem because you don't feel anything, neither. If I trade 100 times, I'm gonna lose $2. that's okay, I can trade more, it's no problem. So the problem is when the emotions start to kicking in. So instead of 0.01 and you lost $1, maybe you lost $10. Now it starts to become a problem. If you lost 10 times, 20 times, 30 times, start to feel something. So but first you need to go from that 0.01 and ask the question, am I feeling something? No, I don't care. That is a problem too. So like it or not, on the end of the day, you need to go from the pain of emotions being displayed, because it's extremely difficult that would you be able to do a back testing like it's real? Would you be able to imagine that when you're trading 100,000 pounds in front of you and you lost 1,000, 10,000, 20, 50,000 is real money? I don't think so. Yeah, it's just, I haven't found anybody can do that, to real thinking that. So the only way to actually learn from that is from pain, from real happening, to real doing it. Yes. So, and it's slowly. Why the prop fence is being created? Why City Trends Imperium created these products, and it's slowly growing up? People thinking, oh, I can trade a lot. No, you need to know what is your right level of actual expertise of trading. Start small, then make the notes. What am I feeling if I lost this? What are my feelings if I lost that? Now go a bit bigger. Even if you lost the account, go a bit bigger. Let's try to make a bit more risk. Let's try to, but no more risk in percentage, more actually lost money. So instead of lose $1, now I lost $10. Now I lost $20. Now I lost $100. Am I feeling the same thing? Am I not feeling the same thing? So then you know where is your control. And so what happened even with me, after many years, I lost X amount of money, and it still affected me if I go too high. Yeah, obviously now it's quite high, but to make any feelings of me, but it need to be quite high, and it will be affecting me too. Yeah, so that is the question you need to ask yourself: what is actually too much or too little? And that's coming from you start trading live. But as I said before, we are now absolute beginners. Let's start from zero. So learn first how to trade. First, you need to think as a trader, to be ready to be thinking properly when you start trading. Okay. Let's see if there is more questions, guys. Hold on. Okay. Okay, so all right, guys, so now before we wrap up, yeah, I want to actually, we're gonna keep it as now. We're gonna actually I'm gonna let you ask me questions for the next let's say 3 to 5 minutes. If you want to, you can ask me as many questions you want, and we can actually reply to those ones. How to be swing trader using very small lots. How to be swing trader? Okay, swing trader is to hold a position for a week. So can you hold a position for a week? Is it risking 0.01? So 0.02 if the account doesn't let you to go for a week because the swap is killing you. So think about that. It's like how much you need to pay for swaps and commissions and costs. So if it doesn't allow you to go that small in real account, that's what you need to measure first into back testing. So you back testing, okay, this is important. Okay, when you do your back testing or your simulations from swing trading, day trading, and position trading, you need to pretend that it's the same amount you're going to trade in real money. So what is the meaning of that? Let's say that you're going to buy a funding account for City Trends Imperium, and the account is going to be $10,000. I'm going to risk $1 per trade. Yeah. So you need to open in TradingView £10,000 account, risking $1 per trade. Exactly the same way. Yeah. Now, then why you don't open free funding account? Well, you can actually open from TradingView as well. You can open from City Trends Imperium and free funding, and open that account and make you to see how day trading, swing trading, position trading work out. Start working that way. Yeah. See how much money lost in and out, how things work and on and on. But the reality, you need to trade in the same amount if you don't have free funding. And as well, I would recommend that even if you do have a free from City Trends Imperium, or I would recommend it as well to test it with no cities as Imperium. You test it with my Forex, what's that calling, TradingView. Open a funding anywhere with one of these free funding accounts and test it, separate broker, because that will produce different results. Yeah, so you want to fit, because every broker is moving different. So figure out what is going on, make the numbers, make notes, yeah, work out the details. Yeah, so more backtesting you do in the right way, better. Yeah, let me see now. So can you tell me, is it good of doing, tell us the goal of doing the swing trading? Okay, the main reason of doing day trading and positional trading, what is our goal with? Okay, so the goal of doing first swing trading is to focus on your feelings, thinking. What do you feel? Okay, let's say that on swing trading, I'll take a trade, I wait 3 days, and it's a loss. Yeah, what a wasting of time. Listen to yourself. Yeah, you go angry, you go out of control after 3 days. You're watching the screen at night, looking at night at the screen because I don't know if my trade is moving or not. Is that we're talking about feelings? Yeah, how actually you make notes of those feelings. I look in my phone all the time. I look in the charts all the time. I look in the day and night. I'm looking into. Then you are out of control. You don't follow the rules because you don't have a plan. This is called swing trading. You must to forget about the trade. If you follow the rules, if you have a plan, you do not need to look the charts. But if you open the trade and after 3 days you look in the charts 100,000 times, you're looking at night, you don't sleep, you look in the chart, then you have no a plan correctly being set up. For your psychology is not connected to yourself. Yeah. Now, day trading. Buy and sell, buy and sell, buy and sell, buy and sell, sell, buy, sell, buy, sell. What happened? You get out of control. You get stressed out because non-stop buy commissions cost. You must go into the point to be stressed out. If you can take in 1 hour 10 trades, next day 20, next day 30. You need to feel the pressure of trading. Then 2 instruments at the same time. Trade. Get this P in your head. Boom. Non-stop trading. Why? Because you must to get that speed in your head. Now, end of the day, 1 hour trading, day trading, you are tired. You got so tired. And when you got after a week, 2 weeks and so on, in and out, then you need to do analysis. You need to do your review. You need to do how much money you make, how much money you lost, it is worth it, how much money commission has been taken off. All that work is part of the day trading is not only take in and out, yeah. And I make $100. No. Well, I lost $100. No. What is the cost, commissions, cost, effective, how many trades, did I follow the rules? So you must review. You tie, yeah, non-stop, boom. Okay, now you go into position trading. And you feel, what? 1 trade, 2 months waiting? Then you actually know that 1 is too slow, 1 is too quick. Then you find what you like. Do you like that speed or you like to be relaxed? Do you like to have that swing trading? Would it give you a bit of more percentage and actually is in between the hybrid? Yes or not? Or then you want to do swing trading and sometimes day trading and sometimes position trading. I'm doing that and a hybrid. So I use everything, but not all the time to get to the point to blow up mentally. Yeah, you must in control. So that's the reasons behind. When you finish the 3 exercise, your mind will be ready to know what you want. Yeah, and you will be ready to understand how everything works. That's it. And then from there you take the decision, what do you prefer? The exercise is to know what you're going to be: day trader, swing trader, or position trader, yeah, or scalper. Maybe you don't know, maybe something else, maybe you like even faster. Yeah, okay. By the way, I'm doing a position trader trading once a week on Mondays normally, and day trading once a month, 2 maximum, and swing trading every morning between 6 to 7 if there is a trade. If not, And now I've been waiting for almost 70 days. So every day I wake up at the same time, prepare everything, and I don't have a trade. If I have a trade, it's swing trading. So it's like a swing trading for me is 3 to 4 days max. Yeah. Okay, how much back testing is enough? How do we find out much? Okay, this is a problem. How much back testing is enough? Okay, let me give you an example of my swing trading. I have back testing 28 pairs for 20 years each day. So I can give you the numbers. 1 second. Times 28. So it's equivalent to 460 years, yeah, of data. I still got to be done 446 days. So it's about 46 years. So about what was that? Yeah, about 16,800 days of back testing I still need to be done. So what is enough? What is enough for you? You feel that what you have done is enough to actually start to test it, that new back testing, and say, I have done 1 year, I have done half a year, I have done, but again, back again to the psychology. Do you feel confident enough? Do you feel strong enough to get an action? Then do it. Now, if you feel, I have some doubts, it's not clear to me, it's not enough, then do more back testing. As I say, myself, it's equivalent to 160 years I've been back testing right now from the swing trading. But initially, I was back testing 10% to see if it was working or not, and I was do sampling. So 10% of 160 years. Yeah, now I'm back testing everything. Yeah, so my 10% was working well. I like it. So I'm gonna go into trading now. Then I found that it was a bit difficult, but I say I'm gonna need more. So I want to back testing everything now. So I use normally summer, August to back testing everything, and December and January when there is less volatility. Yeah, as a trader, I like volatility. So if there is not, I just move on to another month. So I like to use those 2 months to reflect, to recap, to reorganize. Yeah, so I got the luxury to use that. So, and one of the things I want to explain to you, all of you guys, when you start trading, people ask me, but how can you be less emotional, or how can you work out this process better than others, blah, blah, da, da, da. Look, I do use position trading, swing trading, and day trading, yeah? My position trading, they give me enough money to live. What does that mean? Stocks is easier than others. You make less money, but it's easier, yeah? What does that mean? If I do actually make 20, 30, 15, 20% a year, and that is my salary, I got that money every year as salary. And then day trading, the excitement, the swing trading, the excitement. Oh, day trading is too much, I'm tired now, let's go for swing trading. So you see, I switch between those two, but I know that I can make big money too. I'm working on it. Yeah, and I'm fighting, and I make some percentage there, big one. Okay, perfect. But because I'm relaxed, because I go a foundation. It's the same thing, guys, for you. If you're not a trader, you may actually need to find a job first. You don't have a job, how are you going to trade? You only think about money. You don't have security. How will you feel about that? You must be thinking about that. Am I actually thinking only about money because I need money? Then you will not be able to perform correctly because psychology is killing you. You need to have that foundation, that relax. And from relax, you're moving forward. Yeah, this is important. Okay, let's see if you got more questions. Okay, so why trading only in particular date, hour, and instrument, yeah, and the same time frame? Why? Because you will see when you're looking, it's like reading a book. When you're reading a book, you will read the book different way. If you have a upside down, if you do have a big distance, if you can, what I try to explain to you is that is like reading a one page of a book. If you're reading the same, well, okay, let's think about that. How would you feel to read the same page 1,000 times? You will know perfectly well all the lines, no? That's what we're looking for. But some people say, I go intuition, that's I heard this many times. I know something is going to happen in the market. I know something is going to move fast or slow, or something is wrong or right. It's just telling you all these things happen because you have looked in the chart 1,000 times at the same time frame. Yeah, this is important. Look in the same time frame, same pair at same times, because if it's something else different happen for normal, you will notice. You got that kind of feelings. You're thinking something. No, you haven't feeling. No, it's like you have seen 1,000 times, and your memory, your brain tells you it's danger, or tell you, oh, it's an opportunity. So this is the key: is that your brain will work for you if you feed in with the right information all the time. And the right information is to always be on the same time frame. Now, people ask me, what time frame do you use, Danny? I use all of them, from monthly, weekly, daily, because first I need to see a global overview of the market direction. I'm going for the easies. What is easy? They're trending one way, I go that way. Remember what we say, the banks go one way, I go with them. Why am I going to go against them? What's the point? There's no point. Just make it easier. So this is how it works for me. Then obviously when I do trading in 3 minutes. This is my day. My trading is 3 minutes. It's when I see an entry. I used to go in 1 minute. I used to go in 5 minutes. Now, after many years, it's 3 minutes. I love it. 3 minutes is easier because 1 minute is too quick. It's an instrument. 5 minutes is too slow for me. So I found the sweet spot, 3 minutes. 2 minutes, neither I like it. So then 3 minutes is good enough for me to move forward. So let's see. And obviously, Mondays doesn't move the same than Tuesdays, Wednesdays, Thursdays, and Friday. Yeah, Mondays, banks take an action, people move in different way. Then you got open markets start to be open. Then people react of things happen on the weekend. So everything changes constantly. So more news from Tuesday to Thursday in general, sometimes Friday because NFP and other things. So news affecting the market direction as well. Yeah, and people actually, many of them want to close down on Friday, so will affect the market too. So different days, different times will be different effects. Yeah. It's a different page of the book. Let me see, one more questions. Do you depend upon back testing? Result decide to expect to realize what you back testing, drop down 10 hours. Do you decide maximum risk? Okay. Regarding my risk, yeah, we can go into this in more detail. Yeah, I do actually do the following. If I found that I have in one point of my history, let's say 10% loss, yeah, I drop down of 10% on my back testing. And first, as remember, we have to make sure that back testing is done correctly, because you can have a back testing without commission, cost, and all that, and it's not actually the right thing to think. Yeah, so I do actually double it. What is the meaning of that? If I found that I lost at one point 10% drop down, I will say that at one point I can potentially lose 20%. That's it. Very simple rule. Double. If I found that at one point I go 20 consecutive loss, I will put 40 consecutive loss. Double it. Why? Because sometimes you got out of control, you don't feel well, somebody told you that you need to trade this and you follow it, whatever. You make mistakes. Obviously, with the years, you make less and less, and maybe in this case, for me, just 1.5. Since if I lost 10, I would put 15. But for you guys, 20. Okay? So you double it. If you lost 10 times, put another 10. Okay? That's to be safe, is to have control. And then you learn from that slowly growing up, yeah? I usually draw the trend lines in that considered as backtesting. There is thousands of ways to create patterns and strategies, and it could be that it could be a trend line. But how do you measure? The question is that, can you draw the same trend line? If I delete, okay, let me give you an example to make sure that you're backtesting. And for all of you, and this is the last question I'm going to answer, guys, is that imagine that you just find one entry because you have done 3-4 trend lines, yeah, of euro dollar on the year 2021. Okay. Now I want you to take 3, 4, 5 examples of that trend line that you mentioned and delete. So make a photo of those 10 trades, exactly the entry, why you take the entry, yeah, and separate in a chart. So it's like a keep a photo, yeah, make a photo, time and date and entry, why and entry, all the details, yeah. Now I want you to delete the trading video details. Delete that. Don't delete the 10 photos that you have made and the content, yeah, keep it. Now Now I want you to go towards, let's say, pound dollar, and we're going to go to the year 2024. And I want you to do the same thing. 10 trades in whatever location you want. Maybe you say from this month to that month, and I want to trade 10 trades there. This was my reasons, my day, my time, make the photos. And now I want you to delete those 10 trades from TradingView when you take the 10 trades. Yeah. Now, this is the tricky part and the most important part. Go back to Euro Dollar 2021, looking for that exactly time that you're going to backtest in 10 trades. Do the same thing. Now, those 10 trades there, do you found them? You didn't found it? Then you have the wrong strategy. Did you find half of them? Why? Why didn't find the other 5? Then when you know why those 5 you found it, actually you know why, then you have your strategy. Forget about the other 5. Something wrong with the other 5. Yeah. So this is the way you will be able to understand that your backtesting work correctly and follow a process. Doesn't mean that psychology is there yet. That's because you haven't felt anything, but at least you have the right entry based on your brain. Okay. And whatever you have rules, do you have, maybe it could be semi-automatically, automatically, and whatever, and so on. Okay, guys. So hope you like this webinar. We're gonna go on next week, same time at 1. We will continue to talking about trading, and you can see already the description on the live webinar on CityTrader's Imperium. You will see what is about the next topics. Yeah. So guys, so hope you like it, and be prepared to ask me as many questions you want, because I will respond to all of them. So collecting question is important, but if you go something private, something that you're thinking, oh Danny, I don't want to talk there because it's embarrassing, blah blah blah, and so on, you can contact me directly on Discord. Is the only place I normally contact every one of you. So ask me any question there if you want me to answer any other questions. Yeah. So guys, so see you in the next webinar and bye now. Have a good day.